Hi, welcome to the Interaxis channel and Interaxis.io. We're continuing to step through this concept of a mortgage and how Web3, crypto, DeFi is going to affect the mortgages of the future, how we can hypothecate and postulate how we think that Web3 might affect the mortgages of the future. And now what we're looking at is, let's assume that, again, my wife and I have purchased a home the bank has given us the loan for it. Now, remember, the bank is going to require that we buy some sort of homeowners insurance. And why is that? Again, the bank wants to insure the value of their collateral because they gave us a loan of $400,000 on a home that is $500,000. And if I no longer pay the loan, they're going to come foreclose on the home. And if they come and find out that the home has, completely burned to the ground, then they're going to have, $200,000 worth of collateral, because that's the actual land value and not the home, on a $400,000 loan, and they're going to be underwater. So they want to make sure that I get insurance. Well, we all know, anyone who's paying attention to crypto and DeFi knows, we can create decentralized pools of insurance. So right now, I go to an insurance company and they write me a homeowner's policy that I pay for either monthly or quarterly or annually or however I go pay for it. And it is based on, obviously, the replacement value of the home. It's based on whether or not that there's a new roof. It's based on the area I live in. It's based on so many other factors. And remember, I basically go with whatever premium they say I go with. But in the future, there might be an instance where you have something, you have some sort of DeFi insurance product, insurance company, and this could be something like a Nexus Mutual or others, that basically allows us to pool our resources. So it could be that particular bank creates its own insurance pool for the homes. And remember, in order to get the insurance, you're going to look at things like the home value. You're going to look at things, and the home value, of course, is based on the neighborhood it's in. It's based on the size of the home. It's based on the quality, I guess, of the craftsmanship of the home. It's based on so many other factors. It's not just square footage. It's based on any updates, new appliances, how well the house has been kept up. That's the home value, and that's partly going to go into the insurance. It's the neighborhood or the geographic location, right? But now what we could do is have smaller insurance pools that have enough money in there, so it's not that I have to go pay premiums for this huge insurance company. Now that sometimes makes it more efficient, but what if within that insurance company, within that insurance protocol, you could have smaller pool or smaller protocol? So you could see where a certain neighborhood might potentially have its own insurance pool or insurance syndicate, maybe. So you could say this neighborhood has an insurance syndicate that I could be a part of, and I can pay my premiums. And remember, they're going to be able to get the value of the home. If I go back a little bit to previous videos I did about the mortgage and Web3, they might be able to get some of that information on chain if some of it is kept on chain. Things like the size of the homes, things like updates, things like the address and other homes in the area, so that they can get an accurate value. Of course, they're going to be able to get information about the weather in the area. Is there a lot of rain? Are there hailstorms? Are there tornadoes? Are there floods? Those kinds of things. So they're going to be able to get quite a bit of that information, assess the value of the home, tell me to pay my premium. And again, this can be done in a decentralized finance insurance syndicate, where you create a pool, maybe for my neighborhood, right, which might roll up to a larger pool for my city or something like that. So this could be the city pool, this could be the neighborhood pool, something like that, of funds, such that this can be much more targeted. The premiums can be much more targeted to my neighborhood. This might not even be the city. This might be the bank creates its own kind of insurance pool, where the bank can actually provide its own insurance to those that are purchasing homes. The technology is much of the technology is kind of there to do it. It's a matter of figuring out the incentive systems, because others are going to have to contribute liquidity. This is not going to be just based on the premiums that come in. There are going to have to be others that contribute liquidity but this is where we're maybe going to see more investors have the ability to look at a particular city or a particular neighborhood and go, we're willing to fund that particular pool, earn some money from premiums, and we think that there won't be that many issues with the homes in that pool. They can do their own actuarial calculations, and others might be able to contribute liquidity to some of these pools. This is, again, just hypothecation. It might happen, it might not, but this is a way where maybe the idea of homeowners insurance for the purposes of mortgages and for the purposes of my actually protecting the value of my home can eventually be decentralized. And I wanted to make sure that we talked about that in the scope of this entire mortgage and Web3 discussion. Hope you enjoyed this video. Hope you subscribe. We look forward to seeing you in the next one.